Hi everyone, this is Traders Union, the largest community of traders in the world. Today's topic is the 7 best profit-taking strategies in Forex trading. Imagine having a tool that enables you to pinpoint the perfect moment to secure a profit. Well, it's not just a figment of your imagination. It's a reality, a tool that exists and is widely used by successful traders worldwide, the take-profit order. A take-profit order is an order placed with the broker to sell a security when it reaches a certain price. It's a way of locking in a profit on a trade. It's your safeguard, your safety net, ensuring that you don't miss out on those hard-earned gains. But how do you determine what level to set your take-profit at? That's where strategies come into play. In the world of Forex trading, there are 7 common methods to set your take-profit levels. Each one has its strengths and weaknesses, and the choice often depends on your trading style and financial goals. The 7 strategies we will delve into today are 1. Percentage-based take-profit. It's all about setting a target profit at a certain percentage above the value of the position you open. Let's say you open a trade at $1,000. You could set the take-profit at 10%, which would be $1,100. It's simple, it's straightforward, and it's an effective strategy for many traders. 2. We have the fixed-pip take-profit strategy. This is another straightforward method where you set a fixed number of pips above your entry point to determine your take-profit level. For example, if you've bought GBP USD at 1.2300, setting a 100 pips take-profit would mean you're aiming at 1.2400. 3. The indicator take-profit strategy. Let's use the moving average take-profit strategy. The MA measures price fluctuations based on its period. If we use the 50 period, we consider the closing price of a currency pair for the last 50 periods. Therefore, whenever the price closes below the 50 period, we know the price is showing bearish sentiment and it's time to take a profit if we are in a buy position. Likewise, whenever the price closed above the 50 periods, we know the price is showing a bullish sentiment and it's time to take profit if we are in a sell position. 4. Technical analysis levels. You could use several aspects of technical analysis to determine your take-profit level. You can take profits at key technical levels like support or resistance zones or channel lines. In a buy position, whenever the price trades to the resistance level, it signals the time to take a profit. In a sell position, whenever the price trades to the support level, it signals the time to take a profit. 5. Trailing stop loss. It's a type of trade order that moves with market price. If the value of your asset goes up, the trailing stop loss order price adjusts accordingly, staying at a fixed level below the highest price that the asset reaches. This strategy can help you lock in potential profits and limit losses without having to monitor every single market movement. Now, imagine that you open a trade worth $1,000 on any asset and set a take profit of 20% at $1,200. Then, you decide to add a trailing take profit of 10%. Here's how it works. If the price reaches $1,100, nothing happens. But if the price hits $1,200, a stop-loss order automatically sets at 10% below this value, at $1,099. So, if the price drops back down to $1,100, your stop-loss stays put at $1,099. But here's the magic. If the price shoots up to $1,400, the stop-loss adjusts to $1,198. It's like having a safety net that moves with you as you climb higher. Time-based take-profit is particularly useful if you want to limit your exposure to market volatility or if you're trying to capitalize on specific market conditions that you expect to expire at a specific time. Now, let's take a look at a different approach, a fundamental-based take-profit strategy. This involves setting exit levels based on factors affecting an asset's intrinsic value, such as company earnings, economic indicators, or geopolitical events. This strategy relies on your ability to analyze the asset's intrinsic value rather than market trends or technical indicators. So, to wrap up, take-profit strategies are all about protecting your investments and securing your profits. They provide a flexible and automated way to manage your trades, allowing you to ride the highs and protect against the lows. Remember, the key to successful trading is not just about making profitable trades, but also about managing risk and securing profits. In this video, we told you how to trade correctly. We hope this video was helpful for you, and don't forget that choosing the right company is crucial for successful trading. Follow the link in the description to view the best Forex brokers' ratings and choose any of the top 3 companies.